The Dow came back pretty strong on the close today. Once again, closing above the T line. Notice the 3 T line, which is a 3 EMA, has not yet been able to close below the T line. So these are two significant factors, especially for the short-term investor, that if the 3T line cannot come back down through the T line, and the trading can't come down through the T line, it has to be considered that we're still in an uptrend. Albeit it being very flat, there is no change of investor sentiment that moves this market to the downside yet. And we use the term yet because the NASDAQ did close below the T line after many months of maintaining above it. Notice this uptrend started with one of our strongest signals, which is the kicker signal, which represents the area or the time frame where after that there's going to be a strong move, price move after that. Now we've got to close finally below the T line, but this could be a one-day close below the T line and they take it back up, or if they can continue to take this lower and the Dow trades lower below the T line, that's now an indication that the bears might be taking control. Time to close out a few long positions and add some more short positions. The T line is a very important factor for showing support and resistance. The T line is a very simple trend analytical factor in that if you see a candlestick buy signal, such as our left-right combination, which includes a doji followed by a bullish engulfing signal, followed by trading above the T line, you stay in an uptrend until you see it close back below the T line. Or if you see it come back up through the T line, again, a bullish engulfing signal, finally a move back up above the T line. Notice in this move to the upside, which is fairly substantial, that when they pulled it back right to the T line. Now, most investors don't use the T line on their charts, but as we can see, there is a substantial effect of a trend using the T line as its support. That is why we could tell that gold prices broke their technical levels, because they were in a nice steady uptrend. Once again, using the T line as a support, kind of hovered around there, broke out into a new trend. Should have been in an uptrend, except for the fact that we saw a bearish engulfing signal and a close below the T line. That was a significant indicator that gold prices are now probably in a downtrend. First target is we want to see the 50 and the 200-day moving average, see what occurs at those levels. The break in gold prices was further confirmed by silver prices after a gap up in the overbought area, forming a bearish engulfing signal that also closed below the T line and then started back down. Could not move the price back up on a confirmed bullish harami. It opened lower the next day, told us there was no confirmation that the T line was going to act as support. We're still in a downtrend. Once again, anticipating the first target could be your 50-day moving average down in this area. That'll be it. We'll see you in the chat rooms.